First of all, we want to talk bonds. Of course, when we're speaking to some of the companies with the largest bond exposures on their balance sheets. Today we have on the show the CEO of Nigeria's Asset Management Corporation, Mustafa Chike-Obi, and we also have the country group treasurer, rather, of First Bank of Nigeria to give us some perspective on the Nigerian bond market. Gentlemen, it's great to have both of you on our show. And I want to first of all start with you and your thoughts about the development we've seen and the appetite for Nigerian bonds. Over the last 2 years in particular, we've seen huge interest in our bonds. We've seen the yield curve really widen, at least in terms of the number of the products available for issuers. And of course, we've seen yields come down as a result of the demand. Your thoughts on how the bond market is shaping up in Nigeria these days?
Well, let me say that it's developing nicely. And traditionally, in most countries, the bond market is usually far larger than the equity market. And I think that now Nigeria's bond market is getting to be larger in size than the equity market, and that will continue. It's developing. I think a number of things have to be done to increase liquidity and transparency and price discovery. But I think those things are happening well. I think there's been a lot of effort from the DMO to develop the FGN market. But we need some more work to do on the corporate side and on the sub-national side. But all in all, I think that things are developing nicely. As for the yield curve, I think that what you will find is that the yield curve has normalized. The yield curve generally tells you what you expect from inflation and interest rates down the road. And I think what the yield curve is telling you today is that rates will keep coming down, but you can have an upward sloping yield curve, which means longer rates will be higher than shorter rates. But I think things are developing quite well.
We'll come to what AMCON is issuing in a little bit, and maybe I should get perspective from you, Ini, on how the market is shaping up. Foreign investor interest is huge these days. Your thoughts on where it's going from here?
Well, I think the dominant theme for most of last year and the build-up was largely the inclusion of Nigerian bonds in the JP Morgan and now the Barclays Global Bond indexes. So I think, clearly foreign appetite has been driving liquidity. And that's a good thing, a positive thing. We need to remember that our bond market is still relatively young, 8 to 10 years old, so it's still evolving. The important thing is the yield curve has been pushed out all the way out to 20 years, and the developments are continuing to happen. What we now need to see are more products, more liquidity. To that extent, I think the foreign investors or their interest has helped that tremendously. And then more diversification in terms of issuers. The federal government is still the dominant entity. We need to spread down to see more corporates, the larger corporates begin to enter as well. And that will be the natural next phase of development.
I think the argument that many people make is where yields are. And they've come down significantly over the last 6 months. Do you expect to see more corporate issuance at the current levels? Now we're seeing some bonds closer to 10%. In fact, it actually dipped below 10% recently.
Well, the real challenge with the corporate issuers is size. You've got to look at some of the corporates and their willingness to subject themselves to the discipline required with respect to financial disclosure and the right kind of structuring to issue. There have been a couple of corporate issues. A variety of firms have done so in the past, but usually what we tend to see, they're typically small, and that perhaps limits appetite. I think as some of the larger corporates will take advantage of the current yields, and as we look towards where government is going with respect to unbundling and selling off its power assets, some of those entities will have to raise capital, probably through the bond market. So we should see it evolve.
Mustafa, I want to come back to the bonds that you have in the market. Up to recently, they haven't been actively traded. Some people say because they are zero coupon bonds. We know that we have that big maturity at the end of this year. Can you just give us an update on how you're preparing for that and how you think things are likely to change, especially from the perspective of foreign investors and their interest in your bonds?
Well, we had a non-deal roadshow in the US 2 weeks ago, and there was a lot of interest in AMCON's next issuance of bonds, the refinancing of the existing bonds. The zero coupon may have been an issue, but the AMCON bonds were issued directly to the banks in exchange for the non-performing loans and to recapitalize some banks. And so they were issued directly to them. And we always knew that the banks would not be very willing sellers of those bonds because what are they going to do with the liquidity that they get? So there are a number of reasons why AMCON bonds haven't traded as well as we would like. But we're about to announce 3 institutional market makers for AMCON bonds specifically. We will, they will have to maintain markets of a certain size, and they will reward them, will pay them a fee every quarter based on the amount of bonds they've traded. I think that will enhance liquidity.
So you're looking at the zero coupon bonds as they are issued right now. They will start making markets on those bonds.
They'll start making markets on those bonds, and they have to maintain markets. But for that responsibility, we'll reward them with a fee at the end of the period, based on how many bonds they've traded.
Do you anticipate that there will be appetite for the bonds with this market makers structure coming into play?
Well, in many markets in the world, I mean, the critical thing is when you appoint primary dealers and market makers, there needs to be some benefit that accrues to them. Once that is defined, once the number is limited, then naturally you would expect that they play that role. So I think it's a positive development. I think there is appetite for AMCON bonds out there. They recently have started trading. We are seeing the secondary market trades going on. And I think as we approach the December maturities and the refinancing, clearly there will be a lot of appetite, and we should see a lot more activity, especially where the bonds, if the bonds are issued or refinanced at market levels.
Right. Of course, at some point, speaking to a lot of analysts, investors, there were some concerns about the capacity of AMCON to refinance, if you like, this zero coupon bonds. I want to get your thoughts on where we are and how confident you are that that would not be an issue. Some people say that there are some mitigants. If, for instance, AMCON is unable to provide the cash to refinance, they would, the CBN could step in as a willing buyer as well. So can you just talk us through the process towards December 2030?
I think Ini made the crucial point. If we refinance with a coupon-paying bond at market, I don't think there'll be a problem. So there'll be a market clearing price, and we intend to issue at market. From all we're hearing, we think there'll be enough appetite. But we're not going to stand on our laurels. We're going to work very hard in the next 3 to 6 months to again establish market makers, set up a process where there's price discovery and there's liquidity. And I think that if people know they can get in and get out of AMCON bonds without too much of a fee in terms of bid-ask spread, I think you will find that there'll be no problem. But we intend to issue at market, and we think that we will do everything that we can to make sure that it goes smoothly.
All right.
We're quite confident.
We'll continue the conversation after the break. I'm speaking to Mustapha Chike-Obi, the CEO of AMCON, and the Group Treasurer of First Bank in Bank. After the break, we'll take this discussion further. And of course, we'll give you an update on West African markets. We're back in 2 minutes.